Hello, everybody, and welcome to this panel discussion on the role of fintechs in Latin America during the pandemic. My name is Katie Llanos-Small. I am the editor and the founder of iupana, which is a news service and information platform that covers innovation in financial services in Latin America and the Caribbean. I'm delighted to be here to be moderating this conversation between the experts, because it's a topic that's taken huge relevancy this year, right? Financial inclusion has always been an issue for Latin America, but during the pandemic, the dynamic has changed so quickly and so rapidly. So I'm really excited to be discussing that here today with our panelists. So let me introduce you to who we have here. We have Liliana Pozzo, who is Advisory Services Manager for Financial Institutions in Latin America and Europe and Central Asia at the International Finance Corporation, the IF50, which I'm sure you all know. We have Dan Cohen, who is the founder and the chief executive of Tienda Pago, which is a fintech that provides working capital through supply chain financing to small businesses, small retailers, corner shops in Mexico and Peru. Welcome, Dan. Thanks for being here. We have Ana Barrera, who is the co-founder and the chief executive of Aflore. Aflore is a fintech in Colombia that provides loans and other financial services to the unbanked through a network of tech-enabled financial advisors. So there's a combination of the tech and the personal there. Ana, thanks so much for being here. And we're due to have Rafa de la Guia join us as well. Unfortunately, he sends his apologies for personal reasons. He's had something come up and is unable to be here. So he sends his apologies. But look, the topic today that we're going to be discussing is how fintechs have been able to provide support to Latin Americans during the crisis, and how the financial inclusion panorama has evolved this year in Latin America. Before we start with the questions, I want to remind all of you that are tuning in today. First of all, thank you for being here, and to remind you that there is a chat area where you can put forward your questions as well as comments on the conversation that we're having, and I do encourage you to use that as much as you can. I want to open the conversation today with a quick question, the same question to each of the panelists, and that is, what's been the biggest challenge for fintechs when it comes to responding to the pandemic? What's been the biggest challenge? Might start with the fintechs themselves. Ana, in your view, what's been the biggest challenge when it comes to responding to the pandemic?
Yeah, I think that when the pandemic first hit, I guess the question or the main worry that we had at Aflore was how were our customers going to be affected, and how was that going to impact in their lives, in their financial lives, and in the way they pay our loans. And so for the first few months, actually, we decided strategically just to concentrate on them. So we stopped all loan originations and we just focused on our existing customers, understanding on a case-by-case basis what was the situation of their what was their economic situation. And I think that made a lot of sense because I think that actually what we have seen after a few months have passed is that the situations vary quite a lot. We are seeing today actually a surprisingly rapid recovery of, for example, the informal sector. I guess that they are more resilient and more prone of, they are hustlers, right? So they change, they would look for new opportunities, etc. And we are seeing them recover much faster. The same as all those clients that have informal occupations. So even though they have a contract or they are employees, but in reality that's a very informal link, and we have also seen them recover more quickly, unlike, for example, the situation of the unemployed, and especially those that had formal employments, that we are seeing them recover lately. So I think that the first few months of focusing on those, on understanding the specific needs and offering the relevant debt relief mechanisms, because I think that it wouldn't have been a good idea to just open our website and say, like, if you want to renegotiate your debt, click here, right? Because it is important as the economy starts opening and sectors start recovering, that the mechanisms that you have offered the clients are tailored to each of them. And I think that for us, that was the biggest challenge. It was a different way of approaching our clients, and we did so in a very consultative way of really understanding what was going on, and I think that it has paid off.
Interesting. Thanks, Ana. Dan, at Tienda Pago, did you face similar challenges? What would you say your biggest challenge was when?
Yeah, the biggest, I guess, was similar to Ana. Is what do we do? We operate in Mexico and Peru, and really the quarantine in Peru was very, very, very strict. So the corner shops, even though they remain open because they sell food and basic needs, the traffic was really, really down. And the same in Mexico. So similar to Ana, we decided to stop origination for a while and negotiate. We had the added challenge that we had a sales force or account managers that were on the streets, and they couldn't go to the street anymore. So how you, similar to Ana, how do we hear them and understand what was going on with the market? If you couldn't visit them, they were not taking the calls. Many people, like in everywhere, decided to go back to their hometowns and to ride the quarantine, not in the main city where they work, but on the small town where they live. So we couldn't reach them. We were not sure if the store is open or closed. So basically the main challenge for us was how do we serve the clients and we shifted a lot of the energies to the call center and digitally because we couldn't visit them physically. How do we support the negotiation and renegotiation of their debt and not create an additional burden? And that's what we did. We froze everything. We took all the penalties out and let's say pay the capital and let's start from anew. And the third thing that is still affecting us is the economy is still in relatively shaky grounds. The GDP got reduced, everything, the demand got reduced, so their sales got reduced. So there is a concern at what is the right level for them to borrow from us to buy, Coca-Cola or Nestle or their typical products because the demand is. So that's an equilibrium that they're trying to understand what is the real demand, knowing that at any moment in any of our countries, a lockdown might be, or a partial or total lockdown can be reimposed.
Right, there's been that huge shift in consumer demand, right? And that affects the way that you work out who gets, or how the financing is distributed, right?
Yeah.
Liliana, you take a global view. Tell me a little about the changes that you've seen and the challenges that you've seen for the fintechs that you work with over the past year.
Thank you. So, I think, first of all, the micro SME sectors have been disproportionately hurt by the pandemic. But as Ana said, they bounce back because they are hustlers. But I think, this is really moving what we're estimating about 100 million people into extreme poverty. So the effects are significant. And it all has to do with economic downturns, lockdown, uncertainty. In terms of fintech, I really think it depends on the activity of the fintech. So, payments has been booming because now you have people in lockdown, which has actually improved financial inclusion. You had people in lockdown and payments became a necessity, right? Before it was a nice to have, there was this love for cash. And now with the lockdown in countries with severe lockdowns like Colombia, Peru, for example, then payments became instrumental for paying your groceries from all segments of the population. And that really actually helped user adoption in terms of digital channels because the lower income population or those who were not trusting of these digital channels were forced upon, they were forced upon them just for survival. So I think that has significantly had a positive effect on both financial inclusion and the payments fintech. In terms of lending, it really doesn't surprise me what Ana and Dan are saying, because at the end of the day, the entire financial sector became the risk appetite became very low in terms of new credit, right? And that's a natural reaction to an extreme situation with an extreme physical lockdown and economic downturn, right? And so you're going to freeze credit, and we've seen that with lending fintechs with financial institutions. Now liquidity levels of financial institutions are really high, and that just tells you, because it's not because savings have increased significantly, it's because they're not lending. So I think lending and the credit crunch has significantly affected lending fintechs and the receivers of the lending, so MSMEs directly. In terms of tech enablers, for example, that are providing B2B services to banks have benefited, because banks are now waking up saying, I really have to digitize, particularly in the transaction space, in order for me to survive as an institution. And so those low-hanging fruit, it's not an entirely, full blown out digital transformation of a financial institution, but more of the quick wins. How do I make sure that operationally I can transact and my clients can transact, or they're going to go somewhere else, right? To a payment, fintech, etc. So I think that the tech enablers have also benefited from COVID in this immediate response for financial entities, more of the traditional kind.
So would you say that if you think about fintechs versus banks, that maybe the big difference there is that the banks have these huge balance sheets and they're just kind of holding on to that cash and sitting on it, and maybe the fintechs are trying to disperse a little more? Or can you talk around that a little more?
Well, I think, yeah, banks have, banks are regulated, and banks are have the deeper pockets than some fintechs, or most fintechs in Latin America, honestly. So yes, there has been a complete paralysis of credit, and particularly in the MSME sector. I think fintechs, and just by what Dan and Anna are describing, have been more kind of, I don't want to say caring, but worried about their clients. And as Anna was describing, really seeing the situation of each and how do we support them, right? Because it is a smaller customer base. I mean, when we talk about banks, it's a really wide range, and there are many different business models, from microfinance institutions and cooperatives all the way to the big international institutions. So it really depends on what segments they're working in and their risk appetite towards the country and the pandemic. But yes, quite honestly, the credit has stopped on the banking side, and then the fintechs, I think, might, by definition, are much more agile and much closer to their end client, and thus can kind of gauge how the recuperation, or if they're bouncing back, as Anna was saying, and then provide credit in a much more kind of asserted way with a lot more data.
So let's thanks very much, Liliana. Anna, I'm keen to hear a little, in a little more detail about how Aflore kind of worked through the issues of the pandemic. Obviously, you have a high touch model, if we could put it like that. You have your ambassadors who are out there who are working with people. They're tech enabled, but it's also quite a face-to-face model. So tell us a little about how that model changed during the pandemic and how you adapted to that.
Yeah, I think it was very interesting, actually, because that was one of our things, right? So high tech to the informal advisor, and then high touch from the informal advisor to the client. But the good thing is that in any way, the relationships was somehow digital anyways, because we, from the beginning, like the informal advisor was in contact with the client, for example, via WhatsApp, right? So all our advertising, for instance, we would give it to the informal advisor and she would pass it on to her clients via WhatsApp. So what we did was actually that we went a little bit further in that digital relationship. And now, and we were able to launch it very quickly, that our informal advisors, for example, now can just send a loan application via WhatsApp to their client. The client does the loan application in their own cell phone or computer, sends it back to the informal advisor, the informal advisor approves it, and then we do the assessment. So luckily, there was some kind of digital relationship here, and it was very well accepted very rapidly. So that was one thing that we were able to do And as soon as we open again our loan origination, we were up and running. It is very natural for our clients and our informal advisors to interact via WhatsApp. So it was very easy adoption. And I think that's what is very important about financial inclusion when you think about how to solve it with tech, right? Is to use what they use in a way, right? Maybe we had launched an app for our clients, for example, maybe the adoption would not have been as fast as it was doing it via WhatsApp. The other thing that we saw, and that it was a very rapid change, it was I think that financial inclusion, it is a matter of trust as much as it is a matter of access, right? And so even though we had digital mechanisms, for example, to do the disbursements, a lot of the clients would actually prefer to go to our offices and actually go and sign the paperwork at our offices. But that was also very easy to do. So we were able also to shift very rapidly and to provide oral loan disbursements 100% digital. And that was very well adopted. Funnily enough, they did it digital before, and now some of them are still wanting to go to the office, which is counterintuitive, if you want. And the big change is what I think that probably the biggest change for us all, and as Liliana was saying, for the market overall, is payments. So our customers were very reluctant, actually, of doing electronic payments of their loans. In fact, although we had the mechanism, I believe that before the pandemic hit, it was only like 5 to 10% of our clients were doing digital payments. Today, that is 50%. So they still go to their local mom and pop store to do the payments, and that's their natural way of interacting, as Dan well knows. But now it is 50% that are doing digital transfer, and I suspect actually that was very much related to the fact that they also moved into getting more bank accounts digital, no? Because what we saw in the past was that before they were not doing digital payments just because they didn't have a digital mechanism to do it, either a digital account or their own bank account, their normal bank account. So I suspect that what it's behind as well is a lot of bank openings and digital account openings that enable them to do digital payments.
That's interesting. Dan, I'm interested to bring you in on this point about payments. How have you seen, you're very embedded into the payment flows with your clients, right? So how have you seen the digital payments trend evolve? Have you seen a similar uptake? Is 50% of payments digital, about the same level as what you're seeing?
So we're in the middle of two places. We do digital payments between the small shop and the providers of goods, the distributors, and that got more relevant with COVID, since they didn't want to affect there was a lot of, or there is still a lot of, can you get sick by exchanging notes from someone that is sick or not? So most of the companies that we work are large and have good corporate measures, Coca-Cola, ABI, Nestle. So they wanted to encourage all their truck drivers to use digital means of collections instead of that. That helped us. But on the other side of the equation, we have the end consumer paying to the store. And although that is beginning to grow in Mexico, in Peru, it really grew. But that change of opening, easy bank accounts or easy payment mechanism is still very small. So we're not seeing our stores still receiving a lot of electronic payments from the final consumer, so they cannot do an electronic payment to us. The situation is better in Peru than in Mexico. Is coming. What we really saw in terms of digitalization is the interaction with us. As Ana was saying, WhatsApp became the main tool that all of them are using, and from there we're encouraged them, because of their rich environment, that it can be provided to use our app. And finally, we see people using, now half of our clients are using the app, which is a big growth. And it's working very well, or the digital parts. Just as a footnote, one thing that we see happening is the stores have families and the kids are in school, and all the schools are remote in most of the cases. And the main device that the kids are using to access their education is their parents' cell phones. So in a lot of cases, when the truck comes and say, okay, here's your merchandise, let's do a transaction, it disrupts the whole thing. Wait, stop the class here, let me take in payment and give it back. And, learning from a small, cheap smartphone is not maybe the best vehicle, but the whole family got digital now, which is the silver lining, I guess.
Yep. Anna, to go back to you, I wanted to just talk a little about how your borrower's ability to pay changed. And you mentioned at the beginning in your intro comments that just putting a button on the website to renegotiate your credit is not the way to go. So tell us a little about how you responded to that, effectively that deterioration in the ability to pay.
Yeah, I think that for us, actually, as soon as the first lockdown was called, we actually got on the phone and called every single client, because the risk was, as Dan was saying, that they, got scared and they will just not pick up their phone anymore, or they will move out of the city, etc. So actually, that Saturday we got on the phone and we called every single client. And I think that made a lot of sense, because what we said was like, listen, this is not going to become a nightmare for you. We can guarantee you that, but let's stay in contact. So that from then, like the months after, it was so much easier, right? Because then the contactability was good. It was easy for us to reach them, to renegotiate the loans, etc. And as I was saying, like we went from, so basically in May, we provide grace periods, and at the time that was for about 25% of our clients. We had to provide full grace periods for 1 or more months. But as I was saying, we were seeing a lot of recovery. So that is actually now just a 1/10 of that. So we have still clients, of course, that are affected, that we keep on, calling every month, or now we're back in the street in some cases and going and visit them, but we are seeing the recovery. We did other things like while we were close to help them recover. So we did a couple of quick partnerships with other tech companies. So say, for example, we partner up with a temporary employment platform so that our clients or our informal advisors could go and look for temp jobs in their app. We also open like we call it like a virtual market, so that our clients and our informal advisors, and they could invite other people to promote their products via Facebook. We partner up with like a direct sales company to provide other sources of income, with a direct sales company that is focused very much on selling food, one of the largest companies in Colombia. So we partner up with them, and we gave our clients and informal advisors an opportunity to get into their network and generate another source of income. So we just and we started selling, for example, mandatory vehicle insurance, because one of the things that we saw as the market started opening is that a lot of people were afraid of taking public transportation. They were taking their motorcycles again. They needed to renew their insurance, and that was actually a great opportunity for informal advisors to make extra money by selling that insurance. So we just figure out creative ways of also being able to help our clients to compensate for some of the loss. More importantly, to keep a close relationship with us. It's a difficult situation for all of us, and we want is to be on their side, trying to figure out how we can support them.
I think it's really interesting that you took that very proactive strategy at the start to reach out to people before their credits maybe went overdue, or before they started having trouble being able to pay. You just kind of got in touch and said, hi, we're here, and tried to put a kind of a personal face or voice, shall we say, to the company. Dan, let's talk a little more about Tienda Pago. I mean, we've spoken about the payment side, but tell us a little more about how the business was affected by COVID and how your clients are affected by COVID.
Sure. So as I said, our clients were very affected more because of the difficulty of people to move, basically, and especially the company. So we serve the corner stores. All the corner stores that were near schools, universities, big employment places really suffer. And the corner stores that were in more residential places did amazingly well. So that's the first mix that we have to understand. We have to really understand the segmentation of our stores. Where are you? Who are you serving to see how affected you are? As Anna said, we did the same thing. We reached to all of them. We talked with all of them. And at the end, I would say 66% of them came back. We see at least 1/3 to 25% that they close. We don't know if they permanently close or they're still living somewhere else, but some of them, a lot of our stores, the owners are over 65 years old, so they're also concerned about opening and getting sick. So that's one thing that happened. The second thing that happened was the stores literally ate their inventory with their families. These are small corner shops. We're not getting a lot of income. Yeah, here, have a can of beans, whatever, rice. So they literally ate the inventory. So the need of our product became very, very dire. And we decided to open again. We lower the minimum amount that we were able to lend because associated cost. We decided to proactively, it's going to cost us at the beginning, even though the transaction is very small. Our average loan used to be $300 per week. Now the minimum was $100. We lower it to $50 so people can, even with a $50 loan, can begin to replenish their store. So that began to work well. And we talked with the big brands that, since we couldn't be on the streets, but the salespeople and the delivery people of the big brands were there. So we say, okay, you have to use your personnel as the key catalyzer for people to understand that they have a credit line, they have a lifeline, and they can use us. And the biggest brands bought the message. They want to keep the traditional channel healthy. So they are the ones, they still are the ones telling people, hey, by the way, you have a pre-approved line, you can use it, you can do this, you can do that, you can do the other things. And the last one, and we can never put this as easy, and I'm sure everybody knows, is the educational part. Most of our stores, when they see our credit line that we finance sodas or beer or cookies or whatever, they see it as what we call a single line P&L. I buy this at 100, I sell this at 120, and with the extra, and then I pay, the 100 back to Tienda Pago with a small fee. And what they were saying, okay, I have enough money to buy soda, or I have enough money to buy cookies, but I need to buy rice and oil and other things that we don't finance. So it's okay, you have to understand that you don't have to use your money to buy this. For example, Coca-Cola. That money now you can use to buy all the things that you want to buy. So that's speech in 1 minute that they can understand it has been critical. We're still tweaking and working on it, but teaching the store that money is fungible, that you don't necessarily have to use it for the product that you're buying. You can buy what you're buying with credit and use the extra capital for something else. It's a big challenge. It's a big challenge, but getting back to where we are now in Mexico, we are better than pre-COVID days. And that's why incorporating many more clients, the average loan got dropped. In Peru, we're still not there. We want to get there, but Sana said the people are very resilient. The ones who stay, people still need to buy all their goods, albeit at small quantities. So the future looks good, but as always, there is a lot of work and a lot of understanding to make it better.
Thanks, Dan. That's an interesting perspective, and it's I kind of think your comment about the people literally eating the inventory that they have in the shop really kind of brings home the financial impact that the pandemic has on so many people in Latin America, right? Liliana, I'm interested in getting your insights from your portfolio and the companies that you work with. How have you seen some of the major these major themes that we've been talking about, right? Like digital payments and credit. How have they evolved from the companies that you're working with and that you're talking to? What are there some trends that we could pull out on a high level basis?
No, I think really Dan and Anna have really described the essence of how the fintech, particularly lending fintechs, have been affected. I think a big learning for us, honestly, has been the proactivity in most countries in Latin America of the government in terms of really relaxing regulation in terms of KYC for simple account openings, and really pushing for digitalization of the from a financial inclusion angle, not forgetting that population, to really support the transactionality of that population in a way that has never been as proactive, let's say, or fast, with all respect. So that has been very positive in terms of if you offer simple KYC in extreme situations, then financial inclusion will go up because of all the factors we've just been discussing. So I think that has been a significant, let's say, surprise. I don't want to say surprise, but positive benefit, because government G2P payments are now more digital transactions versus in the past where they were more cash based. So I think we have to look at it holistically from a market perspective, and the role that governments have had in terms of debt moratoriums, in terms of regulation, in terms of really trying to push for fintechs to engage more effectively with these lower income populations, where in the past maybe some countries were more in a wait and see in terms of how the ecosystem develops, and here was really no, we really need to be inclusive from that perspective. So I think that's a very important takeaway. And another one is on the demand side, as both Dan and Anna have mentioned, with education in terms of financial education and comfort, but more of a mindset, right, of trusting digital channels versus cash. And it's interesting, Anna, that you say, now they're going back to cash, which is not, it's a bit disheartening because it's been a long battle, and it's really been an uphill battle, and it took an extreme situation for this population to trust these channels, and hopefully that will stay, right? In terms of it works, it's super convenient. I don't have to physically go there. Most of our countries in LAC have crime problems, so carrying cash is a significant risk. So you're eliminating a lot of challenges with digital transactions that, many of these MSMEs are women-owned, women-led. They have the family responsibility. As you said, Dan, the phone has become the school for a family. So digital transactions are really easing that side of the burden for these entrepreneurs. So hopefully they will continue to transact digitally. I think we always have the battle of it. Are they using digital channels just to cash out, right? They receive the government payment, they cash out. Well, when you have extreme situations, they're forced to test the technology and trust the technology. So hopefully that will continue and prevail. And I think, just as a last point, clients really appreciate it when they're called in, how are you doing, versus you need to pay me back, right? And I think that really increases customer loyalty with a fintech, a non-traditional player like a traditional MFI or cooperative, where they say, okay, they took care of me in the worst time. And so I think that will help fintechs with that approach in bouncing back with thanks to increased customer loyalty from that perspective.
Yeah, I think that the question of trust is really interesting. That's something that you, Anna, mentioned as well earlier, right? That inclusion is not really is less a matter of access and more a matter of trust often on these questions. Anna, I wanted to drill down a little more with you on that and just, I don't know, get a bit of an outlook from you on how you see the Aflore and the broader landscape evolving. It's a pretty uncertain time, but what are your expectations or your hopes or your some of your plans for the year ahead?
I'm actually very positive, Katie, because as Liliana was saying, one thing that was very obvious is that the segment that Aflore covers was very much left behind, because typically, so more than 50% of our clients either have an informal business or derive their income informally. What I mean is that they might have an employment, but that employment is not like a formal working contract, etc. And so what happens very quickly during the pandemic is that they were invisible, if you want. One, because they were not banked. To give them access through the formal channels was not viable, no matter like the effort of the government of, say, trying to reach this population. And then on the other hand, they are not as poor, let's say, or they are not, that they are in a phase that they are receiving government subsidies in a lot of cases, which was the other way that government was identifying who was needing help. So they were like in a sandwich, right? They were just like completely invisible. And we were lucky that we have been lending to them for a number of years. So that's why actually I'm very positive. And as Liliana is saying, like in a lot of cases, the government has been quite receptive and understanding of that situation. So, for example, we were one of the first fintechs that was approved to provide government guaranteed loans because we can reach that demographic. But it's actually a funny story, as Liliana was saying, because at the beginning they launched the credit line for informal workers or what they called independent workers, rather, not informal. But they said like you can only provide like the guarantee if the client has been paying Social Security for the last 3 months. And guess how many Colombians in our segment are currently paying either pension or health? So in practice, although it was very well intentioned, that we couldn't give. I mean, for 3 months we gave 3 loans because none of our clients would, even though we were growing at 10% per month. But actually the government has been quite open and open to feedback. And we said, like, listen, if you really want to reach this demographic, you have to get rid of this restriction, because reality is that most Colombians are more informal. And so they did. They have been listening a lot to fintechs, which is great. And they took it out, and now we are able to provide more than 30% of our clients actually can be subject to this type of government guarantees. So I think that's why I'm very positive, actually, because I think that I mean, just think about it, that we're having that conversation here, and financial inclusion has become like a big thing and became very evident here. It makes me very positive on all of us as an industry to get together and work around how we're gonna solve this problem.
It is interesting, and that goes to what Liliana was saying, right, about the government's reducing the KYC requirements for those smaller accounts. It really shows how much of an ecosystem question financial inclusion is, right? It's not just about having a great digital account. It's not about having a great product. It's about everything kind of coming together from the government and the institution and the trust factor as well. I just want to say thanks to everybody who's watching this session today, and to let you know that, if you want to ask a question to these panelists while we have them, then please pop it into the chat box now, so that we can get to those questions before we wrap up the session in a few minutes. Dan, I wanted to get your sort of outlook and perspective on Tienda Pago, on your clients, and how you see things evolving in Mexico and Peru maybe next year.
Sure. So the corner stores are still critical to their communities and the places they live. You know, not everybody where we serve our clients can go to a large supermarket, a Walmart or a large chain and buy, 20 bottles of soda or something. They still is this shop that they go for their daily needs, and they need financing. So the silver lining again, besides the digital, is we see our defaults really, really, really low, record lows. So people are paying on time, people are paying and they're repeating because this is one of their few remaining lifesavers to keep their stores open in their inventory. And although the amounts are smaller, as I said before, I think the biggest concern that they have, as I said at the beginning, is are we going to new lockdowns? Are they going to constrain the foot traffic or not? So maybe that's what they're borrowing less and less, and we're encouraging not to borrow full amounts, but less amounts. We want to expand, really. That's what we're doing in these times. We're expanding nationwide in Mexico, we're expanding nationwide in Peru, and we're opening a new country next year, and that's a lot of work. So we're starting the efforts now because we see this as something that can grow through the entire region. So we're optimistic.
Amazing.
We're optimistic.
Amazing. Good luck. Dan, we've got an audience question coming in. This would be for you and for Anna, but Dan, maybe we'll start with you. The question is, how have you managed liquidity at Tienda Pago, given that you're offering grace periods and you've got, I guess, lower loan disbursements, you've got, there's been such a shift in the portfolio. How have you managed liquidity?
In a way, we were lucky that we operate in 2 countries. So we saw the COVID effects very, very quickly in Peru. And then we decided to take measures in Mexico very quickly of not originating more loans and trying to collect all the loans that we have open. Our loans are only 1 week. So we were very able to recuperate all the money that was out there in the streets. So in Mexico, we didn't have any problems. In Peru, it took a while, but most people paid back. We lost a higher percentage than usual, but not bad. But as you say, most of our institutional borrowers are impact investors as well. They understand the problems and they behave amazingly well with us. And now that we're back, they're providing more liquidity to us to keep growing and keep doing it. As a matter of fact, we closed a deal for a good line of credit for a government institution here in the US. So no problems in that front now. And as I said before, people are paying amazingly on time. So we're good with that.
That's great.
Yeah.
Anna, how about you?
Yes, same as Dan. Actually, I think that's when it pays, all the work that you have put into developing your investor relationships. Because amazing, like they were fully supportive. In fact, we were in the process of closing a round of a big line of credit, and actually the investors didn't pull back. They said, actually, no. There's more reason that we need to go and provide you with that line of credit, and we're still here to support you. So that was amazing. Like the support that we received from investors during these months was what made it possible for us to help to give these debt relief mechanisms to clients, and that as much as our portfolio was affected, we did it, and as the clients have been recovering, then we're back on track, and yeah, we're not having any liquidity problems at the moment. So that's similar to Dan.
Perfect. So look, to wrap up, because we're coming to the end of the session, and I want to ask one question to each of you, and that question is, what is the biggest lesson that we can learn? What's the biggest lesson that fintech can learn? What's the biggest takeaway from this crazy, crazy year for fintech? Liliana, if you had to point to one key learning, what would it be?
I think the secret to the success of fintech in general is agility and creativity and responding to their client demand, to their customer demand. And just what everything that Anna and Dan have described is just that. And that's why fintech, has really grown, particularly in Latin America. And quite honestly, I also cover Europe and Central Asia, as you mentioned. And even though we're right next door to Europe, the ecosystem is nowhere near as what it is in Latin America. So, it's really incredible the amount of entrepreneurship and just, proactivity in terms of there is an extreme situation where the existence of the fintech itself is at risk and the sustainability of the fintech is at risk. And the only way to survive really is to make sure that you're meeting that customer demand, that you're listening to their reality and that you're adapting to that. And so I think that's a big takeaway and a huge lesson learned is that that's kind of the core and the essence of the fintech world and how it really began. And it's what's going to ensure its survival and growth, quite honestly, is that agility and closeness to their customer, yeah.
Dan, what's your big lesson learned this year?
Similar to Liliana, I would say it's agility and the vision that you can take something like this and take it to the extreme. For example, the digital contact of the people, or now everything is call center. But the reason that I keep saying agility is at the beginning, the first 2 or 3 months of COVID, there were a lot of, come on, we have to overachieve, we have to achieve this together, governments, banks, private institutions, NGOs, let's do, but nobody really wasn't sure what's the market needed to do and how can you do it. There was the will, but it was very hard to canalize, and we tried to do that, but then you hit the roadblocks with boards, advisors, and investment committees. No, we cannot approve this. No, this is a big risk. Or this is too small. You're just helping 10,000 clients. We need to help 100 million people. Okay, but you have to take the first step. So the ability to start small, and learn it, and then, hopefully try to grow it as a meaningful base. I think it's what I take away. Maybe if we had 10 million customers, we couldn't move as fast. I wish I had 10 million customers. But I think that the key thing is the ability to act and take everything to the natural consequences.
The ability to do something and do it quickly, right? Just kind of move ahead without maybe the bureaucracy. Anna, what's your big takeaway from this year?
It's really what Dan and Liliana have said, and I think that actually for me the most important is to be centered around the client. Sometimes people think like, oh, it's just tech, let's just put it on the website and it will work. But there's always somebody behind that screen, and that's who you should be really focusing on to develop whatever you're going to develop. So for me, that's a key lesson. It doesn't matter how good you are at developing tech if you're not doing it around the client. So that's what I would say.
Amazing. So it's the twin themes of agility and humanization. Well, look, with that, I think we've come to the end of our session. So thank you so much, Liliana. Thank you so much, Dan. Thank you so much, Anna. Thank you so much for sharing your perspectives and your views and being so generous with your time today. And thank you very much to everybody who was tuning in and listening and asking questions and joining in the conversation today. Thank you all very much. I wish you a wonderful rest of your day. And don't forget that the next session for the Inclusive FinTech 50 is on fintech and platforms. And that's tonight at 9 o'clock Eastern time or 10 a.m. Singapore time, I believe, 9 p.m. Eastern time tonight, fintech and platforms. So don't miss that next session. Thank you so much to everyone, and I wish you a wonderful day.
Thanks.
Thank you all.